My name is Niall Kitson. I'm editor of TechCentral and your moderator for this morning's webinar, where we'll be asking burning question: do you have an open relationship with your cloud provider? To explore this topic, we are joined by Michael O'Reilly, CTO EMEA with Entity Data Ireland, and Ronan Hughes, Principal Architect for Core Banking at Bank of Ireland. At registration, you had the chance to submit a question for the Q&A later. We'll get to those in due course. We will also be taking suggestions through our chat function, which would be moderated by Julia from our production team. Now, cloud partners want to do more than sell solutions. They want to create ecosystems that can be difficult and expensive to leave. However, this is not to say that lock-in is inevitable or indeed punitive. Hence this morning's burning question: do you have an open relationship with your cloud provider? Before we get started in earnest, we have the first of this morning's three polls. Jake, if you'd like to put it live, and we are asking the question: do you see cloud vendor lock-in as a problem? And we've got a yes, no choice, and we'll leave it up there for a few moments before we move on to conversation with Michael. Okay, Jake, do you have some basic results for us?
From the end of it.
Yeah.
60% yes.
Okay. So our straw poll so far indicates 60% yes and 40% no, and this is something we'll revisit in the Q&A. So I'd now like to welcome our first guest, Michael O'Reilly, CTO EMEA with Entity Data Ireland. Michael has more than 25 years experience across the banking and insurance industries. He has a deep understanding of the design, implementation, and management of complex systems, including their underlying support services and vendor management. Prior to working at Entity Data, Michael served as Director of IT for KBC Bank Ireland, where he had responsibility for services across IT operations, including software development, enterprise architecture, and more. Michael, thank you for joining us.
Good morning. Thanks for having us here.
I suppose when we jump into vendor lock-in and vendor management, we're looking primarily at a problem of choice. So let's have a look at the definitions of what you might call light and heavy lock-in.
Yeah. So when let's face it. Cloud vendors offer a huge value of choice when it comes to the types of solutions and capability we put on the table. So it is a very attractive proposition they position there. Within that, you will see a number of areas where your choice around things like monitoring tools and environment management tools provide the standard capability that you need to manage those environments. In some cases, we see these things as what we would call light lock-in. So you take these tools, you integrate them into your operational processes, your operational flows, and you use these tools. Over time, you will see that these tools evolve. Normally, the vendor will give you plenty of notice to say, we're deprecating this tool and we're going to replace it with a new version of that tool. And that can be a middle to low pain threshold when it comes to the actual having to deal with that problem. And you will see over time that there will be extensions, and ultimately you need to make a choice about, do I take the latest version of the tool or offering? Do I go to maybe an open source tool as an alternative, or maybe an off-the-shelf solution that provides a little bit more agnostic solution to my problem? But these are typical things we deal with on a daily basis. The second part, I guess, is where there's more deeper application capability that they're putting on the table. Something that becomes not just sort of part of a workflow or a set of operational processes, but part of your core solution. So an application capability or a database capability or something that's at the heart of what your organization is trying to achieve with its technology. When these change, evolve, move, or become deprecated, they usually a lot more heavy lifting to deal with that problem. A lot of more heart surgery needs to be performed to either move it to a new platform or to take on what the evolved platform is going to look like. In the worst case scenario, where a technology just hasn't worked in the marketplace and the vendor decides to move on from that technology, that requires you to look elsewhere and look for an equivalent in another vendor. But usually there's route maps and paths you can take in that, but it is something that you need to keep close attention to in your strategies.
Let's have a look then at that vendor strategy. I mean, some people take the view to go with a single vendor kind of straight away, and it has kind of its own pros and cons, I suppose. What way would you assess going with a single vendor?
So from a single vendor point of view, when you consider things like organizations that are born in the cloud, and typically those organizations, and we're talking about household names, Uber and Airbnb and Netflix, pick a single cloud vendor strategy. And the advantage there is that they have a narrower and a much faster path to market by dealing with a single vendor and being very successful in doing that. But if you look at these organizations, you can see that the cloud vendors may not provide everything that they need to be able to achieve what they want to achieve. So they spend a lot of time customizing those solutions and bringing their own capability into the mix to make sure that what they have in their offering, meets their customer needs and customer demands. And that comes at a cost, the cost of complexity that brings to you. And if you take that down to a level that more people in this audience are probably more familiar with, is that as you build, in complexity, the management of that complexity and the cost to move that from one vendor to another increases over time. Whereas on the flip side, if you take an approach where you recognize you want to avoid that complexity and avoid that lock-in, is that you start building in abstraction layers and another capability to help you sort of protect you from that lock-in. And therein lies the conundrum. You're trying to balance off the, might speed to market and leveraging, off-the-shelf capability a vendor provides against, do I try to protect myself from that, but by building in extra complexity? And it's getting the balance of that right is the key challenge. And I guess the key topic of this conversation today.
Looking at that idea of speed to market, then, have you found that to be sort of the primary attraction then of going with a single vendor?
In places, yes. The other side of it is that if you traditionally come from a technology stack where you use a specific set of tooling, you maybe gravitate towards the cloud vendor where that might have a strong, affinity for that tooling. And that could be one. It's an easier route for you to move from an on-prem you move your technology stack from on-prem into the cloud. Where for larger organizations where typically they would have every single solution in their kit bag, is that they would more likely gravitate towards a multi-cloud environment or a hybrid cloud environment, more likely to help trying to manage the advantages of that an individual vendor will provide to them to accelerate moving from on-prem to cloud, against what would be where your business or your development community are using really great features that these cloud vendors are providing to help differentiate your products in the marketplace, which sort of incentivize you to maybe pick a particular cloud because they've made it so easy for you to leverage these features. And it's a balancing game across the board.
Part of the problem, I suppose, of going with single cloud, especially over the longer term, is the issue of application obsolescence. Basically, if there isn't a demand for a specific application, your provider might stop supporting it. Is this something you've come across?
Oh, yes, absolutely. I mean, it's very much survival of the fittest when it comes to technology. There's a Darwinian sort of feel for how things evolve over time, and it's very important that you understand that ebb and flow of how a solution is evolving, its usage in the marketplace, what the community is like, to try and make your best guess. I mean, from an IT professional point of view, we're trying to identify the technologies that have the longest life and the longest and the best value for your organization, and trying to keep that horizon in view is very important, so is that you're not caught off guard. And I guess that the big message from this conversation is The technology is there to be used, but understand them. Go in, with your eyes open. Make your decisions carefully, and don't get blindsided or blinkered when it comes to how attractive these look, out of the gate.
Two of the things that I think vendors are looking at in order to keep their customers are sort of price and application elasticity. Where does price come in as a factor? Is it really, as you sort of said there, that Darwinian model, a kind of race to the bottom in pricing? Or is there still this awareness that, do you know what, we might be able to keep our prices if we add features?
That's it exactly. It's about understanding the cost to implement new features, and to get them to market quickly is one factor. But from an operation point of view, it's the cost to run that service is what drives the long-term maintainability and manageability of the service that you're providing. In a world where energy costs are going up and skyrocketing, that will be, I would suspect that will come top of the agenda for most IT organizations about if you're heavily involved in cloud and leveraging cloud, is that cost is likely to increase, and being able to more flexibly leverage and use your workloads and reduce the amount of compute you're consuming, which translates directly into power consumption, is going to be important for your overall manageability. And you'll start seeing more about things like FinOps becoming much more prevalent in the environment and how you manage and use and leverage cloud to get the best value from it.
So let's have a look at the sort of the roadmap people might have, whether they're considering going multi-cloud from single cloud or indeed rationalizing in the opposite direction. Are there any key markers out there that would say, okay, now's the time to start considering moving as opposed to making the decision to actually move itself?
Sure. I think if you look at any survey on the internet around cloud adoption, you can see year on year the increase. It's increasing. Europe may be slightly behind the US in that regard, but it's still, there's a year-on-year improvement, and we saw a bump of that during COVID as well. Is that there was where people were proactively moving to cloud to enable work from home, for example, or easy collaboration tools. So, it's inevitable that cloud is in our future. How we get there and when the decision when to move depends on the organization, and for organizations where there's a heavily regulation oversight, that process can be a little bit slower. But the regulators begin to see the value of cloud and providing mechanisms to help make sure that cloud is a route map that can be easily adopted. But looking at the other aspect of that, I think people have seen as the cost of hardware, with the global access to chip manufacturing under threat. The cost of getting equipment is increasing. The time it takes to get that equipment is increasing. Being able to leverage a global sourcing that a cloud provider can provide you becomes very attractive. In that is that they help you to overcome certain problems, which is going to be important for any strategy going forward.
That's a fascinating point you raised there about the availability of equipment. To what extent has that sort of changed your approach from an entity data perspective when you're working with clients? Have you seen any sort of cases where you've had to say, well, look, yeah, this is a problem right now. Perhaps you're better off waiting for 6 months when pricing might have changed, when availability of stock might have changed?
This is an ongoing, the need to make sure that we're running, on the latest and the most appropriate hardware and software and technology, is an ongoing thing. It's not something you can wait. I think what we've seen is that people are recognizing that in their strategies, and dealing with the problem earlier. They're talking to their vendors. They're looking at the time to deliver equipment and hardware, and making sure is that there's no surprises in that. And so recognizing the problem, I think, is the first thing. Talking to your vendors is definitely the second thing, and coming up with a strategy for that.
Thank you so much, Michael, for that fascinating conversation. And of course, Michael will be back with us for the Q&A portion of the webinar later on. We'll go now to our second survey of the morning, where we are asking the question, Jake, if you'd like to bring it up on screen. Is talent still a significant problem for you in finding the expertise to manage a cloud project? Very simple yes or no. We'll leave it on screen there for a moment and then we'll go to the basic results. Okay, Jake, if you'd like to throw it on screen there for us. And we're looking at 5446. That's actually quite an interesting result based on a lot of the conversations we've had in the past, and that's certainly something we'll revisit in the Q&A. We are now joined by Ronan Hughes, Principal Architect for Core Banking at Bank of Ireland. Ronan has been working in banking technology for 24 years. He has served as Head of European Payments in NatWest, been a Board Director for the UK at the European Payments Council, a member of the Payments UK European Steering Group, and a board member of the Irish Retail Electronic Clearing Company. Ronan, thank you for joining us.
Hey, how's it going now?
And quite the mouthful of experience you've had in the past. It's a good thing I haven't had to memorize any of it. So tell us a little bit about Bank of Ireland's position and the nature of the market you are finding yourself in. And you are in a particularly interesting sector in that there's nothing you can avoid. You have to provide a service in pretty much every aspect of finance.
Yeah, so Bank of Ireland are obviously a strategically important organisation from an Irish perspective, and we're slightly different in that in the grand European scale of things, Bank of Ireland wouldn't be a very large bank. However, we provide a full service listing. So we have, a full retail bank, we've got markets and treasury, we've got corporate banking. We have to provide all aspects of services to our customers and have done, for a couple of hundred years now. With the reality being that where we find ourselves at the minute in the Irish marketplace in particular, with the withdrawal of a number of other banks in recent times, and a number of other new entrants failing to secure a license in Ireland, then that means that effectively we can't really afford to withdraw any of those services. We're reliant upon our customers to be able to provide those services and ensure that the marketplace remains served by a native Irish bank, and so ensuring that you've got more than a choice of just one entity in each one of those market sectors. So from our perspective, that gives us a huge scale in terms of our operations, without necessarily having the same sort of scale of the larger European players. We have all of the problems and issues that go with that in terms of compliance with regulation, keeping up to speed with how those products and services are delivered to the customers, and ensuring that the underlying technology for those is supported, secure, and within regulation as well.
Let's go into a slightly deep dive then on that, because as with COVID, there was a massive move to the cloud from a lot of people that actually didn't have a roadmap for cloud in place, and consequently realizing that maybe we've put too much in the cloud and now having to be more pragmatic about bringing things back down, I suppose, to earth, if you want to use an expression. Has this mapped onto the experience in BOI?
Yeah, so and it is unique to BOI. So, like as you said at the intro, I've been working in banking for a while. But if we look at the approach that's been taken, especially from a regulator perspective, we went back to 2015 as a bank, and you're generally one of the more regulated entities across any industry or sector. It's basically banking and medtech are always going to be more regulated and more scrutinized than most, because you're dealing with people's financial data or their health data. So that being the case, you're always going to have to face a higher bar to entry. And that being the case, so prior to 2015. Any attempts to move significant elements of your processing or customer services onto cloud computing was effectively met with a complete no-go from the regulator, whereas the response was, you can't be using the cloud, that's just not secure, we don't know enough about it, it's not at scale, it's not something we want for this industry. And then that matured over the next few years. So by about 2018, 2019, 2020, we had a push from the regulators so that every time that you were doing anything new or different, the request was, well, why aren't you putting that in the cloud? Surely that would make more sense to have that as the home for it. And then as we move moved into 21 and 22, we began to get a bit of a feedback from the regulator going, might be a bit of a concentration risk on the cloud here. Maybe you need to look at alternatives. Now, one of the aspects of that I think everybody has been looking at, that's been addressed in the introduction and from Michael as well, is the adoption of multi-vendor approach. You can't put all of your eggs in one basket. You need to ensure that you have a mixture of a number of different cloud vendors. You've got private and public cloud, and then that not everything is reliant entirely upon cloud computing as well. We've also got a mixture of middleware services, modern APIs, but we also then, from a banking perspective, and as an incumbent bank that's been around for a while, we have a rump of legacy technology. And one of the aspects I would take into that is legacy is always seen as a bad thing. It's something that's old. It's seen as sort of past its sell-by date, something we need to move off. And while that's largely true for a lot of stuff, there's also elements of it that are still perfectly secure, perfectly viable, and work very well. So I would make a distinction between legacy and heritage. So legacy is stuff that we definitely need to address and find a new solution and home for. And heritage is things that we know will have to be addressed in time, but at the minute it's serving us perfectly well. It's really good from a customer perspective. It's very secure. It's well understood and known, and we can look after it well. And one of the big debates on how you move to the cloud is where you go. You want to get your legacy off onto cloud or middleware services or some other form of new technology. But the debate around that heritage and how you want to carefully manage those systems that are much more intrinsic to your operation is a much more sort of studied debate, where you have to do that in a considered fashion and understand how and why you're going to do that. So it's much more controlled.
Let's look at the on-the-ground experience then. How did you go about identifying which services really had to go into the cloud and which you could sort of either rein in or actually keep on-prem?
Gotcha. Yeah. So from a legacy perspective, anything that was out of date, out of support software or hardware, that was obviously the prime candidate. So you're looking for ready-made fixes or solutions which are available that can effectively be moved across quickly, easily, and with minimal risk. And you want to also minimize that period of coexistence between the two, because obviously from a banking perspective, after recent events in the last 5 or 6 years, nobody's doing a big bang switch over anymore. I actually worked in RBS and NatWest when they moved from the old NatWest systems to the RBS systems. And that was literally done over the space of 2 weekends, where they flipped the switch, turned everything off on the old system, everything on the new system, worked wonderfully well, close enough. But after the experiences of PTSB in 2017, that's not happening anymore. Nobody's doing that. There's no stomach for that. So what you need to ensure that is, as you're moving across, you need to determine what you want to keep. And I suppose also more pertinent to this conversation, who you want to keep in terms of your providers, your vendors, the people who are managing, running, and owning your systems on your behalf, or anybody that you rely on for support services in that respect as well. And that's a big debate, because there can be a big change in going from the old traditional, the old guard of people who had managed and looked after systems for years, to the new world of having it, consumed as a service on a cloud computing basis. That's a big change, and not all of those vendors are necessarily up for the task.
So to bring us to that idea then of the open relationship, when you've been dealing with different vendors, has it been a case of, yeah, actually we don't normally do this, but we will for you, versus, do you know what, we don't do this, but do you know what, here's something over here that we're really good at?
Yeah, it's been a mixture. And what we've found effectively is that vendors will fall into, largely speaking, one of two categories. They'll either be active or passive. An active vendor is somebody who approaches you and says, here's what we're doing for you today. Happy to continue doing that. Here's what that could look like in the future. If you've got any considerations about that, why don't we talk about which option might be, the best for you further down the line? And if you're looking at anything you're different, here's what we're currently doing outside the space that we're currently involved with you in that might be of interest. If you want to know anything about that, let us know. We're happy to talk to you about it. And then you've got the more passive vendors who are happy to do what they're doing now. And if you approach them and ask questions, they'll happily answer them, but they're less involved in trying to uplift, upsell, or you look at the future in terms of where it's going. They're happy to try and continue with what they have today. We have been much more engaged with the proactive vendors, for the people who have been much more concerned about what the future means for what they have today, what it looks like, what they're already doing with other clients, what that looks like, and how it's been successful, because it helps us from our perspective to know what that future may look like, what's already been done, how it might be successful. It gives us a list of reference sites, for example, for other clients that we can talk to say, how did this work, what went well, what didn't, what would you recommend? And that's an important level of expertise, especially, again, if you're in a very heavily regulated industry like banking. You don't necessarily want to be cutting edge. So our our goal is to always be a fast follower. You never want to be the first one over the line because there's an inherent risk in that, but there's also an awful lot of front loading with the regulator, permissions, controls, governance, oversight, which isn't necessarily hugely advantageous for you or your customers. Whereas if people have already done that and proven it successful, you want to be in the next wave of people who are able to adopt that and deliver those advantages to your customers.
So let's then look at sort of the day-to-day aspects of managing contracts then, and looking at lock-in and sort of the length of contracts. Are you finding it easier to negotiate shorter term contracts on the basis of, do you know what, we're probably gonna move in 3 to 5 years time, or are you taking sort of a longer term view of, do you know what, these guys are solving our problems now, it's unlikely they're going to not be solving the same problems in that period of time?
Yeah, and that's actually a very good point. So what we have found is like the traditional world of having that sort of standard 3 to 5 year contract lock in with a vendor. We're coming up to 12 months before the renewal date. There would be those intensive negotiations as to what are we going to do? Do we want to stay? Do we want to go? What does it mean? How much is this going to cost? What new price can we get? That kind of stuff. It's changed in that we have much more elasticity in terms of the contracts. They still are tenuously signed in a sort of 3 to 5 year basis, but considering, especially with the move to the cloud, there's an awful lot more of consumption as a service going on. And that being the case, you can track that as it goes month by month. So instead of going into the last sort of 6 to 12 months of a contract and having that sort of very focused period of renegotiation and debate, already, you understand how the relationship is going on a monthly basis. And it's just a matter of where, we're happy to continue that relationship and roll that contract on, or as a result of developments in the marketplace or experience to date, or the direction that we're going in as a company, we want to start winding that relationship down so that by the time it comes to the end of the current contract period, we're already sort of withdrawn from that product or that service. So it tends to be much more controlled and an ongoing sort of real-time review of how that service is being dealt with, delivered. Because in the new world, there tends to be much less of a 2 to 3 year change program of massive implementations and huge deliveries that are delivered in big blocks, and it's much more incremental upgrade and amendment of services as we see continual rollout through agile methodology.
Bring it, I suppose, to agile then, and that emphasis on having people on the ground giving constant feedback. How are you finding those conversations are going? Is this something, that's eternally there in the background, where it's contracts and governance overseeing sort of the hardware extending from your level right down to the guy, I suppose, on the server room floor?
Yeah, so that's been a change in terms of how things used to be and to the new world of how we consume things today, especially in cloud. So that being the case, it's become much more real-time focused. So the ability to scale up and down as required based on consumption and need, rather than to have huge amounts of storage there to be pulled on demand if required, sitting on-premise in a data center somewhere. And as a result of that, you've got a massive extension of development and FinOps practice, which is a new development for someone like a bank, which wouldn't have existed 5 years ago, whereas now this is endemic across any new supplier or people who are building from scratch as cloud native. And that being the case, you get people like myself having to sit down and start to re-educate themselves by reading new books like this, and have to understand what that means in terms of managing our traditional estate, what remains on-prem, and that blend that we have, and ensuring that we get the best out of our new estate going forward, and have those practices built in so that we have the best approach and the best management available. And that includes with our vendors. And again, it comes back to that debate of being proactive versus passive. If you're proactively stating, here are new features, here are new add-ons, here's how you can control your spend better, here's how you can manage consumption, here's how you can scale up and down, here's how you could adopt containerization in a much more proactive manner, then that's very helpful because it gives us food for thought. We might necessarily take all those suggestions, but having them there means that we don't have to go looking for them, and we're not missing out on any potential changes which will make a material difference to us as an organization.
Looking then at your experience of upskilling and having to sort of have a broader appreciation of the technology and where it's sitting, have you found the appetite again is happening with that in the general workforce, where there is the constant atmosphere or culture of upskilling that needs to be in place in order to, I suppose, not so much develop better products and services, but also to keep people?
Yeah, definitely. So, like from my perspective, I started off my career as an assembler, COBOL and PL1 developer, learning JCL in IBM back in the late 90s. And that would be much more software archaeology now than software development. Yet the majority of our core banking platform still remains on, for example, OS 390 and AS 400 mainframes. And as a result of that, we still have a huge need for that skill set. And it's very difficult to get that old skill set back in. So we struggle in that space greatly. Whereas from the new skill set perspective, getting those skills, they're much more endemic. People are coming out of college and university and adopting them themselves much more proactively because it is something you can actually learn yourself. However, I was greatly surprised by the last poll that said, there was almost half and half. People aren't finding an issue to try and find the correct skill set. We definitely have from a banking perspective, especially as it would apply to our organization and our industry as a whole. That degree of oversight and governance, it's much less, rapid development, rapid deployment, and it's much more considered because of the amount of governance and oversight involved. So we've definitely seen that as a skill shortage, and that's something whereby until we bridge that, and we are proactively bridging that ourselves as an organization, we are reliant on our vendors to try and help in that space, and also to show the direction of where that goes, and in some cases to help with that upskilling as well.
Thank you, Ronan. If you'd like to stick with us, we can now go to our final audience poll of the morning, which Jake is going to deploy now, where we're asking the question, is the cost of power influencing your cloud strategy? And this is a point that we're going to explore a little bit more in the Q&A. So we leave it open for a few seconds. Okay, Jake, if you'd like to close down and give us some results. So 75% yes and 25% no. It's a fascinating figure, and we'll revisit it in detail because I hadn't expected that particular result. So we'd like to welcome Michael back into the conversation at this point. Good to have you back, Michael.
Thank you.
So let's have a look at some of our polls and the results that we got back. Our first poll that we asked, do you see cloud vendor lock-in as a problem? 60% said yes, 40% said no. Personally, I would have expected a slightly more polarized result. Does that surprise you in any way?
It is interesting. To be honest with you, I didn't know what way this would go, because it's when you look at surveys on the internet or on these topics, it's definitely not going to be at the top of the list. Security and compliance and governance and cost to serve are definitely the top up there. And it can be sort of buried in things like interoperability and portability or migration. That's where you usually see the lock-in start appearing. So I'm pleased to see that the number is there, that people are recognizing it as a problem, and that's the first step in going into an open relationship with a cloud vendor with your eyes open. Cloud vendors, things will change. You look at the way they determine their supportability pieces on that. If you look at the traditional model, a new version of a software product or a hardware product usually has many years of a shelf life, and then quite a long afterlife. Very short shelf lives. They give them the opportunity to say, hey, we're bringing new functionality, but we will change it and it will evolve over time, which means you need to deal with that. And they're quite open about that, and that's fine. The piece to keep an eye on is when they decide, you know what, we're going to jump ship now because we have a better way of doing things. That's where it creates an additional level of complexity for the consumer of that service.
Yeah, Ronan, that idea of shelf life, has that sort of informed your own choices?
It kind of has in a way. So in moving to the cloud from the banking perspective, we've been very cognizant of ensuring that any of the mistakes or bad habits that had set itself up in the old legacy and heritage systems for the last 20 or 30 years, we didn't want to take with us to the new world. And that being the case, when we talk about lock-in, in terms of a cloud provider, if they're just providing the actual platform itself, then that's something that, is much less of an issue from a lock-in perspective, because you can easily find alternatives to that provision of service. However, if you're reliant upon them for operation, knowledge, service, and maintenance, whereby you've effectively handed, the whole shebang across to a vendor to run on your behalf, and you're completely agnostic as to what they're doing, and therefore, if you needed to take it off them, you'd find it hugely problematic to replicate all elements of that. That's when you have lock-in as a problem. And I was interested to see the poll, because from the result that has come out, I would imagine that a number of the people on the call have probably already addressed that issue, and in moving to the cloud quickly realized that if you ask the same people to run, maintain, operate and service what you put on the cloud as well, then you were removed from what you owned. And as a result of that, they needed to ensure that that was not the case. Now, there's always still going to be an issue of stickiness there in terms of being able to move at speed, depending which industry you're in, of course, and the size and scale of your operation. But it's interesting to see that people are addressing that much more proactively upfront.
Ronan, question from the floor for you directly. Has Bank of Ireland actually brought any cloud applications back to on-prem? I suppose you don't need to name names, but just go through the process if you have had to do so.
So we have had to do that on one or two occasions, and the reason for that was under consideration with the regulator in terms of the data that was being used and shared. So the difference between private cloud and public cloud is quite extreme, and we had a number of applications on private cloud. And one of the reasons we've taken some stuff back on-prem as well is to have the ability and the effect of business resilience and continuity, so that we are not 100% dependent upon cloud for any core category 1 or category 2 services. So what we do have is an element of dual running, where we have the ability to run certain systems on-prem and in the cloud as well, with our preference being that they should always run in the cloud when available and when pertinent. But if anything went wrong, in the event of an outage, in the event of a vendor dispute, a problem from a technology perspective, we have the ability to own, run, and maintain them ourselves internally. Now, obviously, one point I would make around that is nothing that is effectively considered core has at present been moved onto the cloud. So all of our core services at present remain on-prem.
Michael, I'd like to shift things slightly over to you. Have you noticed much out there where maybe a little bit of skepticism set in, and you are finding clients of your own going, look, what can we actually move back?
Yeah, in reality, when under any industry that's regulated, there's obviously key oversight around this. I know we're going to touch on that later on, with the DORA regulation. In reality, making sure that you can effectively deliver your services to your customers, and take advantage of the elasticity and scalability that a cloud can offer you is very attractive. When it comes to being able to recover and being able to then continue to deliver that service to your customer, I think we've all seen the past where large-scale cloud-based services have stopped working for various reasons. Mostly to disapproval of their customers. Where on-prem you can control that a lot better, and you can define that not everything needs to run in cloud, and that's, I think people are being pragmatic. That's where you see hybrid cloud, where you have an on-prem part and a cloud part to that, and that could be a multi-cloud vendor part. Is that you understand where you want to do things. There's things I can do in the cloud, I can do that effectively, but when it comes to data, I want to keep my data on-prem, for example. That's particularly where we'd see a lot of customers, where their head would be at when it comes to these types of questions.
Yeah.
Michael, a question that Ronan has also kind of answered, but I'd like your input on as well. Our second poll, is talent still a significant problem in finding expertise to manage a cloud project? We had 54% yes, 46% no. Again, actually quite a close result given sort of the zeitgeist, but is this something you're recognizing as well?
So from a talent point of view, I mean, our organization is a talent-based organization, and we spend a lot of time and effort to making sure that we have the right people with the right skills in there. So we have a huge amount of internal training and certification that allows people to upskill their capability. So taking traditional technology that would have grown up with and able to repurpose those for in cloud. So we can pretty much certify you on any cloud technology that there is. The trick is experience. It's easy to get the certification, especially in the open marketplace. It's very easy to do it. There's plenty of online things you can do pretty much for free on any of the main vendors. It's getting the experience to go with that is the challenge. That's where we make sure we cycle our people through the right technologies, get the right certification, get them the experience as well. And so we try to internally source as much as we can and grow that internally. Going to the open marketplace, it was an interesting result. Yeah, I'm glad to see that people are able to facilitate their needs when it comes to these technologies. But it is a challenge out there. You look at any of the internet surveys, and that people are struggling to find certain skill sets and certain technology skill sets. And as we move more and more people to the cloud, that's going to become more of a challenge.
One issue that we touched upon there in our last poll is that of sustainability, in particular from the perspective of the cost of electricity. Michael, when it comes to sustainability, is it costs like these that are propelling people to be more aware of sustainability as a purchasing differentiator?
Absolutely. It's clear that these, I know Ronan touched on the FinOps part of it. FinOps has been sort of around the edges of cloud adoption, and just better overall management of your environment. But when paired up with sustainability, it becomes much more useful tool to help you understand how you get better value from that. From an entity data perspective, we take this stuff very seriously. We have a very, very strong sustainability, and energy consumption is key to that. We've an initiative that our parent company of Japan runs called ION that looks at how to maintain and deliver much more efficient energy at the right cost, the right sustainability level for our customers. And that feeds into not just what we do for our customers, but also into the communities that we serve, and the planet we live on. And it's something that everybody is taking seriously.
Ronan, same question for you now. Of course, big business often gets sort of criticized for greenwashing, adopting CSR measures for the clout, I suppose. From your perspective, where does energy consumption sit in your list of concerns? I imagine it's actually quite high.
It is actually quite high. So I'll give you an example of that. Considering where we're located in Ireland, connection to the grid for new connectivity isn't easy to get, and it's quite expensive. So you have to live within your existing consumption. And as we expand our operation and our business, and as we move to the cloud as well, there are huge considerations around that. So, for example, in the last 3 months, we have recently switched off some large pieces of very old kit. So we managed to get rid of them. That's been on the estate for 40 years. And the day that we switched it off, we saw an 8% saving in our electricity footprint. And like just that alone immediately focused the minds, because it concerned with our IO qualifications and certification for sustainability. But we are hugely concerned, and as most people have become over the last 2 years in particular, around the cost of electricity. It generally tends to be negotiated a few months up front in terms of how much you're going to pay, what the agreed rate per kilowatt hour is. So you need to stay within that consumption basis. And as we've seen, because of what's happened in the Irish marketplace, our customer base expand, the volumetrics, the number of transactions that go through our systems have increased exponentially in the last couple of years. We need to be able to meet that and ensure that doesn't require an equivalent exponential consumption in power. So as a result of that, it's become a massive agenda item, and something that we've actually started reporting in the last 6 months as an actual cost saving measure. So this is how much it used to always be, what's your application management budget, what's your software budget, what's your maintenance budget, and those would be the main lines from a finance perspective. We now have power consumption in there as well. Storage and data all has to be measured. We need to know and understand what's required, because the efficiencies can be very easy to obtain there, especially if you haven't looked at that as an area initially. And once you retain those, once you build those efficiencies in, you need to retain them and ensure that you don't allow it to continue to grow in the future, because that could have a massively detrimental effect on your bottom line in terms of consumption and expense.
I will go to a pre-submitted question now from our audience. Does the panel have any insights as to how critical third-party service providers will react to the oversight from European regulators under the Digital Operational Resilience Act, or DORA? Michael, if you'd like to start on that.
Yeah, so DORA, I think it's due to come into effect in 2025. But we've, in typical regulator fashion, they've been issuing papers on this for the last few years. So we've got to understand what's going to happen there. From a third-party point of view and third-party ICT providers point of view, there's always been regulation around managing risks and understanding your exposure through material outsourcers and material service providers. So that's always been there. What DORA is going to do is going to unify that under one regulation. That gives the local regulating authority the power to be able to audit that capability now. And I think that's good news for both the cloud vendors and for the consumers of cloud as well. I think the cloud vendors will welcome it. I think that they're very proud of the services that they built over time. And I think if people can think back to the early days of cloud, where it was pure compute and pure storage plays and providing infrastructure as a service, as a capability, and offering 5 nines of availability, that has matured significantly since those early days. And they've brought in a massive amount of capabilities there, which they want to prove that they can run the type of workloads that you would normally run on-prem. And this oversight from the regulator, I think, is going to help establish that and make the journey to cloud a little bit more transparent, and maybe not as easy, but it will bring a lot of transparency to the overall adoption.
I appreciate this is sort of a subject that really could run and run until it's actually passed and in full effect. Ronan, your perspective on it?
So for the purposes of this conversation, I agree with what Michael's saying. I understand the direction he's coming from. What I would say specifically in relation to DORA, for anybody who hasn't read it, it's available online. It's quite a bulky document, but if you go into it and look at it, it basically breaks down into 40 different articles. Articles 25 to 39 in particular deal with ICT third-party risk, and that's precisely where you're going to be dealing with your vendors. If you are a vendor, that's where you need to step up to the mark. And primarily within that, what I would call out is there's 3 elements that everybody needs to address, either as a client who's dealing with vendors or as a vendor who's trying to secure their services with the client. It's concentration risk. So not just for the cloud, but in general across the piece, and that includes skills and capabilities as well. Contractual implications across what you're doing with your vendor and how that's going to be met in case of outages, regulation oversight, the ability to report data, remain compliant with other regulations like GDPR, etc. as well, and then the oversight framework. And if you cover all 3 elements of those in terms of the oversight framework from a governance perspective, then that will put you in really good stead with your vendors if you're a client who's using third parties. And if you're one of those third parties pitching for business, those are the 3 aspects you're going to have to go in with a very robust offering to your clients to ensure that they don't have concerns about how they're going to meet their DORA requirements using you as a vendor.
Second question from Flora that was pre-submitted. In the context of workload portability, where do the panel feel Red Hat OpenShift can help in avoiding CSP lock-in? Michael, again, your thoughts?
Yeah, OpenShift is a clear example of a technology that helps you, is designed to help you make your workloads portable. And a lot of the larger vendors, the early adopters of this, have proven that this is an effective way of doing it, of achieving that. Any of the open source technologies, can help protect you to a degree from, that proprietary lock-in to a vendor, especially for the heavy lock-in scenarios where you're trying to leverage a feature, and gives that level of separation and decoupling. But remember the conundrum that comes with the complexity. If you're a first early adopter of OpenShift, there's a lot of potholes and speed bumps that you're going to have to tackle to get that into a meaningful level of adoption in your organization. But the journey is worthwhile, and it's proven by very great success stories that you can easily read on the internet of organizations, financial services and others that have been successful in the use of this technology to help them with the lock-in challenge.
Ronan, do you have anything to add there?
No, in fairness, I think Michael's covered it quite well there. What I would speak to is from lived experience as a bank where we use OpenShift. We're engaged with Red Hat as we are with other vendors as well, but it is one of those key elements that as somebody who's consuming the service, you need to ensure that you have the ability to make those workloads portable. And you cannot have that degree of lock-in. And under what's happening at the minute, moving on from DORA and the previous question, things like logical data corruption, data protection, recovery, that portable workload element becomes a key aspect of your contingency and resilience in face of the upcoming legislation.
Final question for the moment. Of course, we're open to anything in the chat. Ronan, sort of coming for you, I suppose, while creating continuous and sustainable growth in response to the market's constant change, what have been your learnings?
It's retaining that level of service and the ability to meet customer demands and expectations. You cannot seek to just pursue growth at all ends. You need to ensure that whilst you're doing that, you're also improving the experience. You're trying to make sure that you leverage new technologies and developments as they come down, because that if you're just pursuing growth, you will find yourself falling behind your peers in that respect. And it can be quite an interesting and delicate balancing act in order to ensure that you have the ability to make sure that you're as relevant and as viable from a technology perspective as possible, whilst also meeting the demands of your customer and still going over that new business and ensuring that growth can be accommodated.
One final question. I'll leave the last word to you, Michael. Future developments, do you see that greater awareness of lock-in leading to greater pragmatism or leading to better decisions maybe at that point of whether to go single or multi-cloud?
Yeah, I think it's the latter. It's getting to better decisions. As we said, it's going in with your eyes open. It's understanding the challenges and leveraging. You may have existing policies that deal with this type of thing. This is, vendor lock-in is not a new thing. It's been around a long time. It's evolved to a different flavor now with cloud being in the mix as well. But this really applies to any sort of technology decision. Understand the challenges, understand the roadmap, understand how it helps enable your business. Help you build better decisions into your strategy, and recognize that if things change, is that you can deal with that. You can deal with it because you've got a plan and you understand how you approach it, and you've got that open relationship with your vendor. And talk to your vendors. Talk to people like NTT Data who deal with all these cloud vendors. Like we have strong relationships with all these vendors, and we understand their technologies, and we try to listen to our customers, listen to the market, listen to what's going on, and try to bring insight and innovation to those conversations as well. So to Ronan's point, is been able to come up with pragmatic, approaches that allow you to make better decisions.
Thanks so much, Michael. And that brings our webinar to an end for today. That's it for TechFire in association with NTT Data. If you wish to rewatch this event, you will be able to do so on TechFire.ie. And for rolling news, the daily technology news newsletter, and the Tech Radio podcast, please visit TechCentral.ie. Thanks, everyone, and have a great day.
Thanks, guys.